outperform US and Europe as they see Asia entering its sweet spot in early of 2024. More of the challenges could probably be seen in the second half of 2024. To discuss this and more, we have Aurodeep Nandi, who's the India Economist and Vice President, Nomura Financial Advisory and Securities. Aurodeep, thank you very much for taking the time out. Well, you know, the basic question from the report where you've, I think, called India Tiger Cub along with Indonesia and Philippines. Why do you like India along with Indonesia and Philippines, and where is it in your pecking order when it comes to Asia?
I mean, I think it's very important to understand what kind of outlook is there globally next year, right? And it's almost like if 2023 was the year of reaction, 2023 was the year of action, 2024 would be a year of reaction. So most of the developed markets starkly rose their policy interest rates by over 500 basis points or so. And the impact of that is still playing out and will most probably be felt in 2024. So for instance, for the US, we expect that while growth momentum for now is okay, but in the second half of 2024, we expect a mild recession. The euro area is already in a sort of soft recession as we speak. So if you consider China, we expect a further dip that could happen in Q1 of 2024, given just the issues around their property sector and the fact that that could possibly lead to another set of stimulus from the Chinese government. So we are in a setup where global growth is actually looking quite weak in 2024. And I mean, you know, economists can come up and say that this is what we expect, this is what we not. But I mean, post-COVID, it's become incredibly difficult to forecast what would happen just because there's been a lot of structural shifts in the way economies behave. Now, in all of this, what is the saving grace for Asia is strong fundamentals, is the fact that there have been reforms that are in the pipeline. Within this framework, we think that the medium-term prospects for the economies that you mentioned, including India, are going to be strong in the medium term. That said, you know, the global growth slowdown next year is going to impact India. So it's not like growth next year is going to be rosy. It's actually going to be a tough year. But beyond that, we think that India is in a pole position to outperform.
All right, India is in a pole position to outperform from a growth standpoint. We've seen that in our equity markets as well, the kind of flows that are coming to India. What do you think is priced in already in the Indian equities, and where do you see pockets of value, if at all you do?
Well, I think so as you said, markets seem to have bought into this concept that, oh well, you know, India is a rising star, and so to speak. But I think what probably is lesser reflected is the kind of headwinds that we are going into next year. I mentioned global. Also, if you look at India's current growth dynamics, a lot of it is driven by the government, be it on the capex side, be it on consumption side, even the consumption side of the story. Much of it is driven by better off urban consumers. The rural consumption side is still weak. So, and then you also have weaker agricultural production this year because of really bad rainfall. The first first estimate of the Kharif production isn't all that great. So, you putting all of this together, the consumption side likely to be weak. The external side, so the export sector likely to face headwinds next year. So I think what probably people haven't yet kind of wrapped their heads around is the fact that next year can be a year of much more difficulty. And, you know, let's not forget, one of the major reasons why the industrial sector has done quite well this year has been that there's been a sharp drop in manufacturing input costs this year. So, you know, prices shot up after the pandemic and they corrected quite a lot in 2023. Now, whether that kind of terms of trade tailwind will be available next year, I think is the big question, because you're already seeing WPI inflation inflect and start to pick up slowly. So I think for these factors, I would actually be cautious on the growth front next year, particularly in the second half when the global growth situation is expected to worsen.
Okay, just quickly, Aurodeep, if you could just leave us with elections. How much of a risk do you think it is, considering that considering the verdict from the state elections? Just your brief answer on this.
I mean, it's interesting you mention elections, because actually there's some 47 countries that are going into elections in 2024, including the US, including India. So actually, political risk is a very big part of the outlook next year. Now, coming to India, I think the state elections have obviously bolstered expectations that there'll be sort of political stability and the BJP government returns. I think a lot depends. So there's a short-term and there's a medium-term view. The short-term view is, look, as you get into elections, typically governments don't like to spend as much on capex. So the engine of growth, which is coming from capex, public capex spend, which has been at breakneck speed this year, that's likely to slow down. And sort of moving ahead, if you have a similar dispensation, the reform agenda, the priorities of the government are very well established at this stage, which would then be a positive for India's medium-term growth story. But I think there is an...
All right, got that, Aurodeep. We've completely run out of time, but thank you very much for joining in and giving us your perspective. We're going to touch base with you as and when the macros do develop, and we do have a lot of cues coming up. Thanks very much for taking the time out and talking to us. So that's the view coming in from Nomura. We'll take a short break, but we'll be back with some important companies on the other side. Stay tuned.